The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 65, Nasdaq's up 24, S&P's up 5.5, gold contract down $8.90, trading at $17.26 an ounce. We had silver down 27 cents, $17.50 an ounce. Light sweet crude flat, $37.99 a barrel. Notes and bonds. You get the 10-year right now up 7 ticks, trading 138.26. The 30-year up a full point at 177.05. And King Dollar. King Dollar's up 188 ticks, trading 97.346. The euro is at 112. The yen is at 106.79. The British pound's at 124 to 1 U.S. dollar. Tom O'Brien, what's going on?
You know, what's going on is the NASDAQ's going on every day, man. You can't hold that NASDAQ down in the green already.
Can't hold it down. Bottom line, folks, you get summer trading. You get a flat market. Flat market yesterday. Let's get over and talk to our man, Mr. Kevin Hinks, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day here, you want to understand the option market, option strategies, futures. You want to understand why when you're putting option trades on, you want to be by Labor Day. This is the perfect example of it, folks, okay? Because the bottom line is that overnight, the S&P tried to get into its low from the downdraft on Tuesday. Guess what? Couldn't do it. You got a flat market out here. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, the action in the overnight market looked like we were going to have a fun, promising day. And obviously we could still have a fun, promising day. But you're right, Tom. This is kind of, you know, it looked like they were going to sell them off on the open and hit them, and now they're not. And everyone has to understand where we are on the calendar. I know the VIX is 33.5, and that's a big number. But you still have to worry and be cognizant of where we are on the calendar, and that is in that 2-week period right before the 4th of July. And That is not a busy market time.
Kevin, that quote, we're going to can that quote. So picture this morning. This is so true, folks. This morning, I'm up early, you know, bottom line, and I'd been looking at that 3072 number. Do you know what I mean? We got the 3075 in the S&Ps last night. And I'm sitting down, and that's exactly what I thought. I said, you know what? Because, you know, if you're up at 5:30, folks, it looks like, okay, man, it can actually get there because it already been there. And then I start thinking, and I can see the market. I says, you know what, man, this thing, I was thinking of you. I'm saying to myself, it's going to flat. This is summer trading. Like, even though we're a week ahead of, like, July 4th, like, we're here, man. I mean, it's, you know, because there was definitely a lot of news that could have moved this market, and nothing moved it, man.
Right. And people just have to understand that doesn't mean the market can't move.
Right.
But it just needs more. It needs more inertia to get it moving. And, you know, it moved overnight. You know, the airlines, there was some shaky news on the airlines, shaky news on Carnival Cruise Line that kind of threw some of the recovery in. I mean, one of the data points this morning was a little weaker. Jobless claims was a little higher than they wanted it to be. But then the Philly Fed number was a big one.
Yes.
They were expecting negative, came in positive. So the Philly Fed, and that's just a regional number, but if that signifies a manufacturing turnaround, then things are okay. But the jobless claims number looks like it plateaued this week. It didn't get significantly better. It got a little better, but not the progress that they were hoping for. But I mean, we're in the summer, guys,
and this is where, folks, you know, Kevin's, you know, every time I think about it now, we're going on years, Kevin, that we're talking, and you always, you know, get us down pat coming into the spring, coming into the summer, that you want your trades out after Labor Day. And this year, you know, the bottom line is that no matter what strategy, whether you're a bull or a bear, folks, you want to understand that VIX is at 34. So those strategies, you're getting more premium for the same type of strategy, which is pretty wild. I mean, it's what is it? It's the 18th of June right now, right?
Exactly right, Tom. And this is a gift that we have this year with premiums being so high. But, Tom, I'm going to tell you a story. Quick one.
Yes.
When I used to go down to the trading floor in the spring, April, May, and June, I would write on my trading card where I held my positions, don't buy summer.
Yep.
As a little visual reminder to myself. And young traders, I would write on their card, don't buy summer.
Yep.
That means don't buy implied volatility, don't get caught being long options in the summer months. And that's why whenever you watch our shows, all the way from swim lessons to fast market to where we are now, I always, once I get to here, I target everything after Labor Day that I'm buying. I'll sell summer.
Sure.
That'll be the short side of my trade, but everything I buy is after Labor Day.
Yeah. You can see why, because there's less market participants, right? And it's like it's like laid out, folks, where it is. And I don't care if you're a bull or a bear, you can think that, hey, it should go up, it should go down. Well, guess what? When there's less market participants, and if the market can flatten out a bit, people say, hey, okay, listen, man, you got to take a break at some point. And that's what you're looking at more than anything, right? I mean, that's what it really comes down to. So,
right.
Pretty amazing.
Exactly.
Man.
And just less eyes, less thrust on bad news, less thrust on the upside on good news, just less overall eyes on the market, inability to take it further than we think.
Yes.
It's remarkable. I was talking about, Kevin, in my show this morning. If you back it up to like April 17th, right, the S&P's approaching 2,900, and then we just came down to 2,923. So it's remarkable, almost 2 months. I mean, that huge acceleration April 17th, and even since then, you could call it just kind of like a lot of sideways action with, a 400-point S&P run in the mix. But even since then, not a lot of people would have realized, I think, that the S&P is kind of just going sideways since we peaked out in mid-April, as the volatility in that time has been still 20, 30, 40 above.
Yeah, exactly right. I mean, these moves, and now it's important that we say, I'm not saying the market can't move.
Right.
It can.
Right.
But there's got to be some news. There's got to be some event that makes it happen. And that can happen. We've seen it. But if it doesn't, if there isn't some news that makes this market move, and just overall gravity will pull that VIX down over time. And you saw it. It tried to get up to 40. It touched 40 a couple days ago, and now it's, we're 33.5 and hanging on by a thread.
And what has happened, folks, and this is what's so cool that, you want to understand define risk. Because what really has happened, as Tommy just said, we get a flat market. But guess what? The market has moved tremendously overnight the last couple of months. But it's still flattened out during the daytime. I mean, it's wild what's been going on, right?
Right.
You can push it around at night, but the reality is that once the market gets opened back up again, it seems that, it can get its legs and say, okay, I want to go sideways for a while. I haven't figured out just yet what I want to do.
Tom, that's a really good point. There was some serious volatility overnight in some of the futures market.
Yes.
They were up, then they were down big. I'm sorry, they started out down, then went up significantly overnight, and then down again. So
right.
By the time we got open, relatively muted.
Totally. Kevin, you have a great weekend, a safe weekend. We look forward to the show in 45 minutes. Look forward to speaking to next Tuesday.
Always great talking to you guys. Thanks for having me on.
You too, Kevin. Thanks.
Stay right there, folks. Tommy and I come right back. Dow's down 28, Nasdaq's up 22, S&Ps are up 5. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 13, Nasdaq up 14, S&P's down 4.5. You know what's so wild, Tom, is that talking with Kevin, right? I found it hard to even comprehend, and I heard you this morning saying that we've had a flat market since April, and we have, but it's so weird because there has been volatility, but yet we're still at the same place, man.
There's been like the most extreme volatility you can almost imagine over that time,
Seriously?
which is why it blew my mind. I mean, you had in the Dow a run from May 14th of almost 5,000 points from May 14th up to June 9th. Okay, literally about 100 points shy of 5,000 in that time.
Right.
But when you back things out, the Dow especially, you go to that April 17th, the same day, okay, the high there, 24,327. And we were just trading at 24,409. You were within 100 points of where you were at on April 17th. And yeah, you would have had to stomach some real possible exposure if you were the one selling volatility during that time. But if you were managing those trades, man, there was a lot of times where that market was coming back to right where you were or right about. Yep. And there was a lot of premium over the months of between April 17th to May 18th, you were still sitting there, and let's just see where the VIX was for basically, the middle of April, because this is what you would have been collecting, right? On April 17th, you were dealing with the VIX at around 40, and you still had spikes to 40 to 40. You never made it below a low of 26, and you're kind of in that realm. Now they've rebounded again, but we'll see what happens. But when Kevin's speaking to, even since April, it's remarkable that we've been, and history always says it, right? What do they say? Like, if you're not in the market for some of those biggest days that you get right after the losses, that was the case, man. We went from March 13th or whatever it was to April 17th, and that was the straight run of, from 2,100 and change to 2,800 and change in the S&P. And yeah, we're sitting at 3,100 right now, but we're up almost 200 points in the last 3 days. So
pretty wild.
It is.
Amazing. Let's take a look at some of the higher volume equity. Well, here, let's first, we got to go to Hertz first. HTZ, yesterday, in the middle of the day, the bottom line, the SEC, said, hey, listen, man, you're not going to push out worthless paper. So they had to pull back their plan. And the amazing thing about this, folks, is that when they stopped, the stock and opened it again, it didn't matter, man. The bottom line is that
it actually traded above where it was at.
It did. It got up to 235. Yeah. Exactly. Crazy, man.
It is. I mean, they froze the stock at a $1.94 yesterday. And late in the afternoon, when it opened back up, it traded as high as 222.
Yeah.
Would even know 229. And it's sitting right at $1.95, man.
Crazy. Now, if we go over to, if you want to see another dog, folks, it's going to be a big problem. U.S. Steel. This is, you're going to see something here. Now, if I bring this back, U.S. Steel right now is down $1.10, trading $8.28. And you got to see this thing. And I know people love trading it. I don't blame them. I mean, I haven't traded in years now. But the bottom line is that this equity, continues to basically dilute itself in a huge way. And, it's just a matter of when it's going to be out of business. What they're doing now, so check this out. They're sending, I think they're diluting by a huge amount. Let me find this
$400 million stock plan, I think it is.
How much is it?
$400 million, I think.
$400 million, okay?
Yeah.
And they're selling it out, of course, at $8. And why, folks? Because they lose so much money.
Right.
If you see this thing, but you know what? This is where it takes so long to kill a brand, especially a U.S.
something
Steel.
Like when you have the name United States in the name too, U.S. right? U.S. Steel. Why not? That makes it even tougher when you think about it.
There's no doubt. And when you look at these numbers, folks, okay, the bottom line, going out this year, they're going to do $8.9 billion, $10 billion next year, but it doesn't matter. The more that they basically do, the more they're going to lose. This year, I like to see I see how they're going to make it through this year because they're supposed to lose $5.56 a share. A share.
Yeah.
They're only trading $8.26.
Exactly. Hey, how about, can we jump over to natural gas? Let's put a whisper number in, man, before the 10:30 number.
Okay, WHIS. Okay.
Can you go 2 for 2 on the week,
so.
man?
Let's see. I was looking at my trophy last night. My natural gas trophy. Let's see.
Yeah.
Natural gas storage. No. Is that it? Yeah? No.
That's it. That's the one, man. They're looking for. It's it. Yeah, 85 or 84, I think they're looking at, right? Depending on the number. You got natural gas. What are we trading at? Like $1.62 right now. I'm looking at the contract. I mean, we're down to $1.60. We're as high as almost 165 overnight, down to 162.
Look, this is a mess. Holy
I know. We were
cow.
just at 183 a week ago.
This just can't handle price, man. So what if we went and tested 158, 159?
Yeah.
So that would be saying that you got a larger build. The natural gas, they nailed it, this whisper number the last couple of weeks, didn't they? Remember?
Natural gas has not had the type of variance that crude has in terms of varying from the estimates. They're usually pretty close, if not off by
What do you want to put in?
Go 86.
86, okay. There we go.
We'll see.
Cool.
A little bit bigger than the whisper.
I
but
know. It's so close.
Because it is. It's usually like, the whisper was 85 or the median analyst estimate was 85 and it came in at 85.
Yeah, I know, man, which is,
There just must not, there's not as many unknowns probably in that natural gas as there are in crude in terms of the amount of crude that gets used, bought, consumed, produced, drilled, all that.
Yeah, a much better gauge on it. That's a nasty chart, man. We've been talking about this nasty chart for a long time, man. I mean, it's so sad because I know folks just think that it's still going to be going
up eventually, right?
And it's like, okay, well,
it does not.
It does not have to. I put this on I'll put this on a generic chart. Just means it's a continuous chart, folks, and we put this up, and you're going to see that it's going after the bottom of the range again. Let me see.
I mean, just as you're pulling up, what's remarkable is we're almost disassociating ourselves from like what really is energy. When you look at the price of crude, is that a 42-gallon drum, right? That was selling at like $10.
Right.
And of those 42 barrels, you're making like 28 gallons of gas, 18, something crazy. The real content of what's in that barrel for how cheap it was, man, is just mind blowing.
It is. So this is looks like I got a 40-year chart up, a 30-year chart up.
Okay.
So you can see, look at, you're at 163. You're back where we were in 1998. You break this area, folks, and you're going to be at like 140.
It's funny, that chart reminds me of a chart of like the VIX, where every year or so you get these insane spikes, but no matter what, man, when you get a spike, just wait. It's going to come back down because that is a crazy chart.
Isn't it? Think about this. I mean, think about at one point in 2005, folks, gas was 15.78 a BTU. 15.
It's basically 10 times the price you're paying right now.
Yeah.
I mean, even in, what do you got? In 2008, it was close to that. 8 times what you're paying right now.
Yeah. And if we go back to the last spike, but this is a classic. If you want to see what a classic trend would be, you get lower highs
definitely.
And lower lows. Yep. I mean, that's about.
No, I remember going through it with you, right? Every low was lower, every high was lower.
Yeah. Crazy, man.
Yeah.
Dow Industrials right now down 45. Nasdaq's up 5. S&Ps are off 9. Gold, they're whacking gold again compared to where it was this morning. We're at 17.23. You're down $12. Silver's off 33 cents. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling a problem with us out here. So let's go take a look at this S&P, and you'll see what we're talking about, folks.
We got to get
natural gas. Sorry.
Natural gas.
Yeah, natural gas. Shame on me, man. Okay, 1 second. Where we are here? Okay. Come on, let's see. We need 86. That's what we did, right? 86?
That's right.
10G. $85.
Yeah, I should have went with the mean.
Look at that.
That's all right. I wonder how many people, it'd be interesting, we'll pull up the list. I wonder how many people guess 85, right? Like we said, it comes in at peg. I guess maybe they all win the
I don't know. Let's see.
We tried this before. It doesn't, something's glitching. Is it going to let you?
Yeah, it let me yesterday.
Oh, it did. Okay.
Your estimate is 86. Okay.
Yeah, see, there's like 1085s.
Yeah,
see?
right. Exactly, right. Okay.
It's almost like game theory. I wonder how that works. Do they all get trophies?
Probably. If they're all
I mean, we're ranked. There might even be more than. Oh no, you can guess to the half. Okay, there's you can guess 84.5 or something like that.
Okay.
Interesting though.
Yeah.
All right, we'll settle for 27th place because we were off by 1.
Yeah, it's not bad. This is
no, you can't be 1.22, man. We'll remember that one. We'll get that clip.
Yeah, totally. So if we look at this S&P, folks, this is important to understand when you get these high volume lows that's still laying out there. So what we have out here that hasn't get whacked yet is that. Let me pull this up a little bit more. There it is. Okay, so. It's 3,072. That's the high volume low that came in when we had the monster volatility on Tuesday.
Yes.
Then it just snapped right back. Okay, and you can see that what ended up happening is that last night we got down to 3,075. Now, of course, there's no volume overnight, but the bottom line, we got down again and tested it at approximately 8 o'clock in the morning, which. It would not that it's more valued, but a bottom line as more people coming in. So this is something to still keep your eye on, man. I mean,
I would agree, man. I mean, that run from high to low that day, pre-market, it was almost 100 S&P points. It was almost 1,000 Dow points. So the market very uncomfortable. It looked like up at 3150, and maybe they're saying, hey, we're okay at 3,000. We're okay between 3,000 and 3,100. But naturally so, man, you start approaching all-time highs in the S&P can we segue to some of these Florida numbers, man, that I had up here for COVID?
For sure.
Let me see if I got them because I know
sent you that chart. Yeah, that chart's pretty scary looking.
When I get them by email, I can search. They don't include any of those charts, unfortunately.
Oh, they don't?
I get all text, so I read it. And I'll go find it. But I mean, some of the charts that, number one, you got cases spiking. All right. We're in Florida. Arizona's a tough one. Our man, Larry Pesavento.
And the sad thing is, folks, our governor's out there claiming that it's this and that. It's like a joke. Yeah. Let me tell you, you're in the middle of it. They're spiking.
Don't worry. We're gonna put the numbers out there, and you can't deny them, folks. All right. If you deny them, it's a form of willful ignorance because the numbers are there. They don't lie. They're simple. They're simple numbers. Yeah. Right. These are the numbers that have to do with testing, okay? These are the numbers in Florida that have to do with testing. The number of negatives, the number of positives, okay? Now, the top column I have here, a person can be counted almost multiple times, I think is how it goes in. This is the real number down here, okay? Number of people that tested positive divided by the number of people total. We just climbed above 10%. That's a staggering number, up from 4.4. Okay, this is the amount of people testing positive. That number has nothing to do with increased testing, okay, because increased testing, it would be staying the same. And the scary part here as well, lots of scary stuff in terms of where this is exploding. This is for the 16th. This is 48 hours lagging. You see the difference between 96 hours? We went from 4.4 to 10.3. Well, reality is we're already 2 days out, and we don't have those numbers from here. Huge numbers that are going on. So that's your testing number. That's your cases number. And it's a big number, man. I know, we've talked about it. St. Pete getting hit, but that's, so to tie it back to the market, man, how are we going to be dealing with these types of numbers, right? And we have the S&P at all-time highs. I don't square that in my head. The NASDAQ, I can square that. Yeah. I can square that the 100 biggest tech companies in the world, that investors are saying it's going to be maybe tumultuous for 6 months in a year, man. But these companies are accelerating growth in a way that you couldn't imagine for people flocking online. But when you start talking about 500 companies, man, there's not 500 of the biggest tech companies that are all winners in this. There's going to be some losers, man.
There's no doubt. And, as you're talking, you got to see this. When we talk about volatility, this S&P, this is about as wild as that we just got. In the matter of like 6 minutes, folks, okay? We traded down to 3,098, and then you traded up to 3,115. So we moved 18 S&P points.
Yeah,
and
it was 3 minutes. I just put it 3 minutes. I put it on a minute-long chart, and three bars is all it took for that whole move, man.
And then where do we get back to? Flat.
Yeah, right? I know.
Oh, man.
And like Kevin said, it's not saying it can't happen, man. In this market, you better believe it can happen, man. If you were, the Dow moved 5,000 points. You had the S&Ps on May 14th at 2760, and you traded almost 500 S&P points. So if you're selling options, man, there could be some pain as well. So we're talking about the S&P the same. If you were selling premium in the middle of May, you moved 500 points by June 9th, man.
Wow. Let's go inside the NDX 100. Now, we're coming into option expiration tomorrow, too, folks. This is quad witching, so we'll see if we can get some volatility there. And we look at the NDX. You got BioMarlins, up at 3.5%. Marriott's up 3%. You got T-Mobile up 2.9. You get Fox up 2.5. Taken away from it, Biogen's taking a hit out here. That's a big hit. That's down 5%. JD.com's off 3.6. You got Regeneron off 1.3. Let's just look at Biogen for a second. See what's happening there. $14. Yeah, look at Biogen's having a tough time, man. This is that's pretty amazing. So the biotechs in general, folks, have been the rocket ships and the lottery tickets, no doubt. When this day and age of, everyone basically looking at, I got to escape out of that one again. There we go. So, okay, so we bring this back. Oh, I see. Well, look at this. This has been a consolidation forever. Okay, so it's going to the bottom of the consolidation. This has been a consolidation. Look at this, man. This is crazy. So this has been a consolidation since 2013. It's 2020. That's pretty wild, man.
Yeah.
Yeah. And the bottom is consolidations 216. You're at 266. Yeah. And guess what, folks?
Big consolidation.
Yeah. 4 months ago, we were at 374. Man,
yes.
That's pretty intense, folks, for the largest biotech company in the world. That we're talking about something that, think about how you try to value that, Tom, right? That's they do $14 billion and gross. They have a market cap of, where is it? Of $43 billion, right? But yet you can consolidate in a $150 point range.
Yeah.
That's intense. That really is intense. No doubt. Dow Industrials right now up 9, NASDAQ up 20, S&P's bottom line down 3. Stay right there. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome, folks. Dow down 32, NASDAQ up 14, S&P's off 6. We get a fluctuation about 10, 12 S&P points there, just banging back and forth, man.
Yeah, and pretty muted response. We didn't even really talk about weekly jobless claims because the market really not affected by it that much. But 1.5 million, more than the market was maybe looking for, but just takes it in stride, man. Just kind of hanging out at 3,100.
Yeah, there's no doubt. Let's get over and we'll take a look at that gold market. So gold has had quite a run. We can make the same argument in gold, not that it's an argument, as in the S&P, folks. Okay, gold has been going sideways since April 7th. Take a look at this. The breakout was April 7th. April 7th. Bottom line was still there, and you got up to this 1749 today. You're at 1728. I like how this is trading. What ended up happening yesterday is it's peeking its head out here. As long as this doesn't get into 1714, 1714 is the low that was established out here on the 10th. That's saying to me that, this is still wants to, not only go to 1787. What you do have here is that this is a confirmed ABC structure on the way up. Now, it certainly turns into a complex one, meaning you've been going sideways for such a long period of time. But each time it tries to get the highs, like today, even if it doesn't hold price, you're going to have volume in this market because we're already 130,000 contracts, folks, in the gold market, and that's a big number. Just to show you, yesterday we rejected lower price with 140,000 contracts. So when you look at that, it's like, okay, you got to a higher high than yesterday. You haven't held price yet, okay? What is going to get interesting here, Tom, is that when our man Teddy Kegstad was talking about yesterday on this dollar, right?
Yes.
And the dollar is peeking its head up right now, folks. It is. It's only up 200 ticks, but last 5 days the high was 97,454. Yeah. And we hit 446 out here today. So it's like, if I go look at the euro right now, basically is sideways. That being said, though, that the pound looks like it wants lower. Yeah, look at the pound. I mean, the pound's breaking the lowest swing. And what's helping the dollar is that the yen wants lower price, higher strength. That's going after the lower end of it. So you get the yin and the yang out there, but that's going to be a big deal in the gold market for sure.
Yeah, I mean, that gold contract especially, man, I mean, you could almost make the case even that, like, it's been in that range since March 24th. I mean, gold's V rebound was almost 3 days, man. From March 20th, you were at 1457. That was a Friday, my birthday.
Yeah.
And then by Tuesday, you were at 1698.
I know.
So,
Yeah.
and we just, we're trading at 1706 this week.
Right. Yeah.
Craziness, man.
$250 in 2 days, 3 days.
Yeah. Just mind blowing, man. Now I'm going to give you a gold report, a plug, man. Pretty cool. So I was talking about this morning. The archive, great time to sign up for some of the newsletters, folks. You get archive webinars with some of the newsletters as well. And I think it's time to get you in here for another Gold Report subscriber webinar, man, because the next leg up in gold is 1,794. That's the one you did towards the end of last year.
Oh, that's wild. Yeah.
I know. And we hit basically 1,789. And I pulled it up when you did that webinar. So it was September. I'm just pulling back out. And we were trading basically at right about $1,500. There's on the chart. I got it up. We're at about 1,500. So quite a run, man. You're talking about, 250.
Do you have the number? It's wild, folks. This is hard, but this is where you better want to make sure that you have a good time every day. Because when I look at the amount of years I've done it, it blows my mind. I think I'm on 18 and a half years or something, right? Like, is it 9?
No, I'll tell you. I know. What are you at? You're on
9 something, right?
Yeah, you're on 947.
947 divided by 52.
You just published 947. So 948.
18.2 years.
And here's the kicker I was thinking about too, man. You issue 948 coming out on Monday.
Yeah.
That means you're exactly 52 issues away, 1 year away from issue 1,000, which will be next year right at this time.
Crazy, man.
I know.
And I remember it so well the first couple times I was doing it, folks, because in Florida, what happens, of course, in some of these offices, I didn't have air conditioning in the office. Well, we had it, but they turned it off on the weekends. And
yes.
I remember, oh, my God. And Dale Petz, one of the Tigers out here, he was helping me with all the charts at that particular point. So it was like crazy, man. It was like pretty cool. Wow.
It is crazy. And I think it's, 2002. Was that what it was?
I think so. Yeah, it must have been 2000. It looks like 2000. Yeah, 2002 would be right because we're in June right now. Yeah, that would make sense. Yeah.
Well, I'll do a quick 948 divided by 52. You're at 18.23 years. There you go.
Right. Woo. Now, if I fast forward 18 years, folks, it gets a little scary.
Don't play that game.
But since I started counting backwards when I was 60, it's okay. I'm only 51 right now. That's a beautiful thing.
There we go.
Totally.
Perfect. To be serious, man, weekends, I talked about, Steve Rhodes, I talked about his newsletter, Mastering Probabilities, about a great archive workshops. You've got 2 archive workshops in there, and let me just pull up again. So this is a subscriber area, right? So you get the next leg up in gold, 1794, but you also did one towards the end of the previous year that still applies to the gold market from the beginning of the bull market in 2001 until now. So 2 great workshops.
Yeah, and that's a beauty, folks. I can say they're both beauties, but that one there, the one from 2001, because the one from 2001, I'm making the case that gold can get over its highs. It's not that much over its highs. The high, I think, was 18 or 19 something, but
1927 maybe.
Yeah, the case on the first one there, which I'm still on, is that GC1 is that it's about 25 something. That's the case, and what
the
happens,
price projection is that what you're talking about?
The price projection,
cool.
and it's pretty clear when you actually take a look at it on a long-term basis, folks. And what it is that you're basically coming up to the highs, and you have volume coming up to them, which we do, by the way. That's what's so cool about this, okay? And then what it would be just a very large ABC structure on the way up. Because when you see this, it's hard to, and this is where percentages really are important to come into, because it's hard to comprehend. When you look at the volatility in the market, it's like a vicious, right, in the gold market. But yet, from the lows of the beginning at 252 in gold to the highs there in the generic one, we got 1920.
Yeah.
To lows of 50% retracement. So it's like,
not
okay,
bad, man. We're coming right back up to those highs.
They're coming right up, and as we're coming up to them, volume is building up, and that's how you know that, well, your probability is good that as you're coming up to the top of that, if you take that out with volume, bottom line, you're going to get, that's an ABC structure in their way up, which, when we got out of gold, folks, we got out of gold at 1750. Gold hit 19 something, okay, 2 months later. And what happened is that there was plenty of people that thought it could go to $2,500, $5,000 all day. And I just couldn't even, well, technically I didn't see it, but fundamentally I did. It's easy to see gold at $2,500 now in another year. You know what I mean? That's with all the money that's sloshing around.
I agree.
That's not a big
The first time you had gone from 200 and change to almost 2,000,
exactly,
right? This time for sure.
This time you're going, it was, I forgot what it was 8 or 9. But anyway, stay right there, folks. Tommy and I are coming right back. Dow right now down 13, NASDAQ up 21, S&P's up 5. We'll come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 53, NASDAQ up 12, S&P's down 9. And there's no doubt, Tom, that NASDAQ composite is just hanging there. What's intriguing is that, we've had the S&P's up and down 10 points or something, but the composite is just laying there up 10 points the whole time we're on, man.
Yeah, I know, especially on that weekly jobless number. It don't matter, man. I mean, just calm market. I don't know what we're waiting for. Maybe we're waiting for July 4th, like Kevin says. I don't know.
And, if you take a look at Apple, Apple's going to have, all these big tech stocks going to have a slight problem with the European Union as well as our own government. The bottom line is that You know, the European Union going after Apple for squashing competition, which, you know, no doubt they have.
Yes,
now you're going to prove it. But the fine's extraordinary, man. I was looking at the fine. The fine is like something like so much of your revenue that is like monster money, man. I mean, it's not small amounts of money. Now, granted, that's going to take years, but
any punishment. I mean, it's a bummer that we always talk about it, right? Any real punishment that these companies get for what they do, it's just the cost of doing business, which is not a real punishment. So hopefully, I don't know what's going on over there. I don't know if they deserve this one, but punishment should be a lot larger. I mean, if you're going to disincentivize future behavior, because $1 billion doesn't even matter to a lot of these tech companies if it allows them to grow and gain market share, which is exactly what's happening.
And on top of that. And in the case of Apple, what they're saying is that when they see a nice app that comes out, the bottom line, you know, they get it in the App Store, then they whack it out of the App Store, then all of a sudden they get another app that is very close to the same deal. Do you know what I mean?
Yeah. I mean, how about Facebook buying Instagram, man? That is for $1 billion. Talk about squashing competition, man. That's one of the ones that I literally and I'm pretty liberal. You're pretty liberal. Democrats get out of it sometimes. I think that one has a ability to be unwound for the benefit of all of us, man. Because that's just
pretty wild.
It is what it is.
Cooking, man. Stay right there, folks.
Love you, man.
Take a swim coming up next. I'm Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon.